U.S. inflation has accelerated recently, causing concern for families and businesses alike. A latest report from the Labor Department reveals that the Consumer Price Index (CPI) increased by 3% in January compared to the same month last year, marking an uptick from 2.9% in December. This rise also comes after a 3.5-year low of 2.4% recorded in September. But what are we talking about? Inflation refers to the increase in prices for goods and services over time, which can erode purchasing power for consumers. A recent surge is largely attributed to rising costs in essential areas like groceries, gasoline, and rents. For instance, grocery prices surged by 0.5% just in January alone, driven significantly by a notable 15.2% hike in egg prices, a consequence of an avian flu epidemic affecting bird populations. This relevant inflation impacts everyone. It affects family budgets and business planning. Also plays a crucial role in economic policy decisions made by entities like the Federal Reserve, the Fed. Inflation rises above their target, currently set at around 2%. It can lead to tighter monetary policy as they attempt to control price increases. Various sources have weighed in on the situation. According to Christopher Rugaber from the Associated Press, the unexpected boost in inflation could dampen optimism among businesses that had been experiencing renewed enthusiasm following previous tax cuts and deregulation efforts under former President Trump. Economists such as Sarah House from Wells Fargo noted, "We're really not making progress on inflation right now," implying that persistent elevated prices will likely constrain any forthcoming easing of interest rates by the Fed. The immediate impact of this inflation increase has already been felt on Wall Street. Dow futures fell sharply by approximately 400 points following the announcement of higher consumer prices, indicating market concerns over sustained inflation levels, leading to continued high interest rates. Historically speaking, we've seen similar situations where inflation spikes have led policymakers into difficult corners regarding interest rate adjustments, most notably during periods like the late 1970s and early 1980, when inflation reached double digits in instances. Then, aggressive actions were taken, including significant hikes in interest rates, which ultimately aimed at controlling runaway price increases, but also resulted in recessionary pressures. A bigger picture here is about understanding how current economic strategies may shape future financial landscapes for consumers and businesses alike. Any might overlook that tariffs proposed or implemented can further complicate matters. With Trump's administration already imposing tariffs on steel and aluminum imports, which economists speculate may raise overall consumer prices, there's a potential ripple effect across various sectors, including automobiles and appliances. In conclusion, assurance from Federal Reserve Chair Jerome Powell that they expect inflation to eventually decline over time. There are numerous variables at play, including international trade policies, which could complicate those projections significantly. It stands now with ongoing tariff discussions combined with rising core consumer prices. The outcome remains uncertain as we move through these economically turbulent times, highlighting once again just how interconnected our global economy truly is.